Welcome back, everyone, to the Dinar Daily, where we continue to monitor the shifting tides of the global currency markets and the specific developments coming out of Iraq. If you have been following the narrative of the Iraqi dinar, you understand that the landscape is often filled with speculation, but the information we are looking at today suggests a fundamental shift in the structural reality of the currency. We are looking at reports indicating that the long-awaited hydrocarbon law, often referred to as the HCL, has received approval, coinciding with the completion of a new rate framework for the Iraqi dinar. This is not merely a routine update. It represents a potential foundational change in how the currency is legally viewed, managed, and potentially valued on the international stage. For those who have tracked this story, the alignment of legislative approval with a completed rate structure is the specific mechanism many have argued was necessary to move the currency from a state of stagnation to one of active utility. For years, the community surrounding the Iraqi dinar has navigated a complex maze of rumors, unverified intelligence, and hopeful speculation. Many individuals have held this currency through long periods of silence, waiting for concrete evidence that the financial authorities in Iraq were taking the necessary legal steps to reintegrate their currency into the global fold. The difference with the current news cycle, according to the information at hand, is the transition from theoretical discussions to legislative action. The reports of the HCL law's approval suggest that the political and economic disputes that previously bottlenecked progress are being resolved. This legislative step is critical because without a solid legal framework, any talk of a rate change is essentially moot. A currency cannot fundamentally alter its standing in the global marketplace without the statutory backing of its issuing government, and that is exactly what this new development purports to provide. To truly grasp the magnitude of this update, we have to look deeper into what the hydrocarbon law actually signifies for the Iraqi economy and its currency. Essentially, this law acts as the backbone for revenue sharing and resource management within the nation, which in turn provides the collateral and economic confidence required to support a stronger currency value. By allegedly approving this law and finalizing the rate framework, Iraqi authorities are effectively legitimizing the new value structure under strict national law. This moves the conversation away from the realm of what if and into the realm of statutory reality. It implies that the value of the currency is no longer just floating on market sentiment or hope, but is now anchored by a formal legal decree that international bodies can recognize and interact with. This transition to a legal framework has profound implications for financial institutions, both within Iraq and globally. For a long time, major international banks and financial partners have likely viewed the dinar with caution, treating it as a speculative instrument rather than a stable tradable currency. However, with the ratification of the HCL and the completion of the rate framework, these institutions are essentially being given a lawful mandate to proceed. It acts as a regulatory green light, signaling to the global banking sector that the Iraqi dinar is preparing to operate under new standardized rules. This legal backing is the essential missing piece that allows banks to prepare their internal systems for a new rate, moving from a posture of observation to one of operational readiness. For the individual holder, this news serves as a form of validation for the years of patience and strategy. The psychological toll of holding a currency that has remained static for so long cannot be overstated, yet the approval of the HCL suggests that the groundwork for a structured revaluation has finally been laid. This means that the holdings in your possession could potentially transition from being viewed as mere paper collectibles to becoming a recognized financial asset with a confirmed value. This is a complete paradigm shift. It changes the asset from a high-risk gamble into a legally recognized store of value. While we must remain neutral and grounded, The implication is that the waiting period was not in vain, but rather a necessary interval while the legal architecture was being constructed. If the new rate framework is indeed complete and backed by law, the potential for value recognition becomes a tangible subject of discussion rather than a dream. For those who acquired the currency at its previous lower exchange values, the formal recognition of a new rate could result in a significant alteration of their financial standing. However, it is vital to understand that this is not magic. It is economics. The value comes from the legal recognition and the economic strength of the country backing the note. This development suggests that the potential gains are no longer dependent on hype or internet rumors, but are now tethered to the legislative success of the Iraqi government and its ability to implement the framework they have reportedly finalized. Credibility is the currency of the financial world, and this update is largely about the restoration of credibility for the Iraqi dinar. With the HCL law in place, the new rate framework is not just a proposal. It becomes an officially sanctioned financial standard. This sends a powerful signal to the International Monetary Fund, the World Bank, and global investors. It indicates that the dinar is moving away from being a fringe speculation and is becoming a currency recognized under formal legal and financial structures. This kind of recognition is what opens the doors for international banking systems to begin accepting the dinar for trade and exchange, potentially forming liquidity pools that allow the currency to function normally in the global economy. We must also consider the ripple effects this will have on how the dinar is perceived worldwide. If the currency shifts from being a curiosity to a currency in play on the global stage, the way it is valued by markets will change dynamically. International investors may begin to reevaluate the potential of the Iraqi economy, viewing it as a legitimate emerging market rather than a conflict zone. This shift in perception is critical because currency value is partially derived from confidence. As the legal framework solidifies, global confidence increases, which supports the stability of the new rate. This is a macroeconomic process that turns the gears of finance, slowly but with immense power, potentially affecting every holder watching this development. However, despite the excitement surrounding the approval of the law, we must maintain a realistic perspective regarding the timeline and the mechanics of the process. A legal approval does not equate to an instantaneous, overnight flip of a switch where the currency value skyrockets in your hand. The likely path forward is a structured, phased activation. This involves complex logistics, including verifying holdings, authenticating existing banknotes, upgrading banking software, and ensuring strict compliance with international anti-money laundering standards. These things take time, coordination, and absolute precision. Holders must understand that the green light is the start of the operational phase, not necessarily the immediate finish line of the exchange process. Let us walk through what this activation process might realistically look like, as it is crucial for managing expectations. The first major hurdle will be verification. It is highly probable that all notes held by individuals, both inside and outside of Iraq, will need to be checked for authenticity. This ensures that the money supply is clean and that counterfeit notes are removed from the system. This process protects the integrity of the new rate. If the market were flooded with illegitimate notes, it would destabilize the new framework immediately. Therefore, holders should anticipate a rigorous process where the legitimacy of every note is confirmed before any value can be realized. Following verification, there will likely be a significant focus on documentation. In the modern financial world, anonymity is becoming less common, especially with large currency transactions. You might be asked to prove ownership or record holdings in a formal registry. This is standard procedure for anti-money laundering compliance and is designed to protect the institutions facilitating the exchange. This step ensures that the wealth generated is legitimate and traceable, which is a requirement for Iraq to fully integrate into the Western banking world. While this may seem bureaucratic, it is actually a sign of legitimacy and safety for the process. Parallel to the verification and documentation efforts, the banking institutions themselves must prepare for the physical and digital handling of the exchanges. This involves allocating liquidity. Funds must be made available in the appropriate currencies, whether that is US dollars, euros, or others, so that when exchanges begin, there is enough cash on hand to cover the transactions. This is a massive liquidity exercise. Banks cannot simply print money to cover exchanges. They must have the capital allocated. This suggests that behind the scenes, complex negotiations and transfers are likely taking place to ensure that the liquidity pools are deep enough to sustain the initial wave of demand. Simultaneously, regulatory oversight will be established to monitor the entire ecosystem. This ensures that everything follows international financial standards and that the process remains fair and transparent. When all these pieces, verification, documentation, banking readiness, and liquidity are in place, a structured activation can begin. This phased approach is designed to protect the economy from shock. It minimizes risk for the banks and provides a secure environment for holders. It is a methodical, slow-moving machine, but it is the only way to ensure that a revaluation of this magnitude holds its value over the long term. If the exchanges go live under this new framework, the practical outcome for holders could be profound, but it requires a level head. If the new rate is meaningfully higher, the impact on personal finances could be dramatic, turning what was once a negligible holding into a substantial asset. For some, this equates to financial stability, the ability to pay off debts, or the capital to invest in businesses. However, we must view this through the lens of responsibility. This is not just about newfound wealth, it is about the transition of an asset class. The dinar could move from a speculative bet to a cornerstone of a diversified financial portfolio. Beyond the individual, we must look at the ecosystem that could develop around a revalued dinar. If the currency becomes legitimate, we could see the development of specific banking services, financial products, and investment opportunities tied directly to dinar holdings. This moves the discussion beyond a simple currency exchange and into the realm of long-term investment strategy. A functional, recognized currency encourages commerce, which in turn creates a demand for banking products. For the patient holder, this could mean options beyond just cashing out, such as reinvesting in the emerging Iraqi market or utilizing financial instruments denominated in the new currency. With this opportunity comes a heavy burden of caution. Even though the HCL law provides a legal footing, holders must remain grounded and vigilant. The process will be regulated, and getting caught up in emotional hype can be dangerous. Assuming immediate, astronomical returns or making risky financial moves based on speculation before the official exchange windows open is unwise. The focus now should be on preparation, verifying your own holdings, organizing your documentation, and staying tuned to official communications from certified financial bodies. Ignoring the official guidelines in favor of internet rumors is the fastest way to make a mistake during this critical transition. It is also crucial to avoid the hype merchants who push unrealistic projections or get-rich-quick promises. The potential for the dinar is real, backed by the economic recovery of a nation, but that does not mean everyone becomes a billionaire overnight. Prudent, methodical action will always yield better outcomes than blind optimism. There will likely be limits, tiered access, or specific banking requirements. By preparing for a regulated financial event rather than a lottery win, you place yourself in a much stronger position to navigate the complexities of the exchange process when it officially commences. This development also has broader implications for communities where many people hold the dinar. If the revaluation moves forward smoothly, we could witness significant shifts in local economies as people begin to inject newfound liquidity into their surroundings. This could manifest as investment in real estate, funding for local businesses, or support for higher education. The ripple effects of this liquidity could help revitalize areas that have suffered from economic stagnation. While this is not guaranteed, the possibility that this currency could act as a stimulus for local community growth is a powerful narrative that extends beyond personal gain. On the international stage, the passage of the HCL law and the approval of the rate framework will likely draw the attention of global investors and governments. This renewed interest could lead to foreign investment inflows into Iraq, development projects, and new banking partnerships. A stronger Iraqi economy strengthens the dinar, and a stronger dinar reinforces the economy. It is a symbiotic relationship. For the holder, this means that their currency is part of a larger economic transformation. You are not just holding paper. You are holding a share in the potential rebuilding of a nation's position in global finance. We must also address the potential challenges, as no transition of this magnitude is without hurdles. Logistics alone presents a massive undertaking. Verifying millions of notes will take time and human resources. Mistakes or delays are almost inevitable, which could cause frustration among holders eager to exchange. Furthermore, if demand outpaces the supply of liquid cash at the banks, we could see bottlenecks leading to wait times or exchange limits. Understanding these potential pitfalls now will help you maintain your composure if and when these delays occur during the rollout. Market psychology is another volatile factor to consider. Some holders may panic sell at the very first hint of revaluation, fearing the rate might drop, while others may refuse to sell, holding out for a theoretical higher value. This variability can impact the stability of the exchange rates and overall market behavior. It is important to have a clear, personal strategy that is not swayed by the collective panic or greed of the crowd. Knowing your financial goals and sticking to a predetermined plan is the best defense against the emotional swings of the market. Given both the promise and the potential pitfalls, the best course of action right now is to do nothing rash. Avoid selling to speculative buyers or engaging in gray market deals that promise quick cash but undervalue your asset. Instead, focus on the administrative side of your investment. Count your notes, record your serial numbers, and store them in a secure location. Do not share your personal financial information with unverified sources. The safety of your physical assets is paramount right now, as scams often proliferate during times of high anticipation. It is also a time to manage your expectations and those of your family. If you have friends or relatives who also hold dinar, encourage them to rely on information, not speculation. Help them understand that this is a structured banking event, not a free-for-all. By creating a community of informed, cautious holders, you help protect each other from bad actors. There is strength in unity and awareness. When the time comes for exchanges, a calm and informed approach will ensure that the process is smoother for everyone involved. Finally, remember that today's announcement, while massive, does not come with a specific public launch calendar. It is normal for there to be a gap between the legal passage of laws and the public implementation of those laws. It could be weeks, or it could be months. What matters is that the structural foundation is now reportedly in place. This news marks the start of a journey, not the end. Stay ready, stay aware, and above all, stay patient. The future looks to be moving in a positive direction, but it will require discipline to navigate the final steps of this historic financial shift.